Hello and welcome back to the Stocks with Tusky YouTube channel, YouTube's favourite capitalist pig, for the portfolio update for the 4th of July 2021. So last time we looked at the portfolio, we were up at $6,700 and oh boy have we been doing a bit better than that recently. I have contributed a decent chunk to this portfolio, but yeah, a lot of it has been gains. And we will start off with A2. Yes, we have to talk about A2 milk. Well, we're actually doing a lot better. I have added to this position quite a bit. I would say buying the dips, but it hasn't stopped dipping so far this year until recently. They have hired a new chief marketing officer to replace the one that resigned. So we are actually up back to $7 a share, which means I am now only 28% down rather than 40% on the last update. Watching that back kind of hurt. Moving on to AFT Pharmaceuticals, we're actually down on this one. Unfortunately, they're a bit stuck. They're a bit range-bound. They've put a lot of the research and development into their products. They've just been waiting for approval to get their products into the EU, and that's taking some time due to them not being able to get people over to do inspections. They've done a lot of it online. I don't want to say through Zoom, but through various online streaming sites. But yeah, just the growth hasn't been there. But long term, this will be a dividend play. So quite happy to hold on to this one. I probably want to buy a bit more, to be honest. So we'll see where we go over the long term. Next up, Beyond Meat. Now, in the last video, we were down 17%. Now we are up 17%. Oh boy, so happy I bought in those dips. Like, this was my largest position. I was a bit hesitant to add a bit more, but I am so happy that I did. We've had nothing but more deals coming out with this company. They're now going through one of the supermarket chains in Australia. Towards the end of this year, I can see this company being an absolute growth beast. And if certain commentators like Meet Kevin are correct about a rotation back into growth companies, this should do very well for me, fingers crossed. But that sort of brings us into Coinbase, which I have added more heavily into. We have had a recent spike, which is nice, but we were down quite a bit more on this one. Unfortunately, I just picked a really bad point to start buying. But we've averaged down a bit. It's a long-term play on where you think crypto is going to go, and I do have a portfolio of various cryptocurrencies, Bitcoin, ETH, and quite a few altcoins. So I'm quite happy to see where this one is going over the long term. I'm bullish, obviously, otherwise I wouldn't hold the damn thing. But yeah, we'll see where it goes. It's got one that's going to be volatile, so yeah, just buy the dips and wait, essentially, and next month hopefully this ages well. Next up, Dropbox has been an absolute beast for us, up 48.9%, so almost 49%. This has just been it's been slow moving, but I mean, it was undervalued for a growth company. It's still undervalued for a growth company, so definitely one that I'm planning to hold. We've had an activist investor come on recently that's bought into the company quite heavily, so that'll be quite interesting to see how that goes, because they've had an interesting track record when it comes to companies that they've invested in, but still happy to hold for the meantime. Energy Transfer, another absolute beast for us, up 52%, and I've actually done a video on this one as an individual company, which I'm hoping to do a few more individual stock breakdowns coming up in the future, so look forward to that, guys. Subscribe if you're not. But yeah, the oil price has absolutely pumped, and they had a massive storm in the States over their winter, which massively benefited Energy Transfer. So it was partly luck in that happened, which massively benefited the stock, and partly that, just, pat myself on the back a wee bit that, it was undervalued, and I bought in for the dividends as a long-term hold. I'm definitely going to hold on to Energy Transfer. This is just going to be one of my dividend plays that I will keep for the long term. Before we move on to the next one, that kind of brings up the two stocks that I've sold out of this portfolio. So one of them was Lockheed Martin, which was going to be one of my long-term dividend plays. I just wasn't as excited about it as I was with Energy Transfer, so I actually sold that position. It was only like $50 or roundabouts, and I've put that money into Energy Transfer just because I like their prospects better, and I'm well over diversified in this portfolio for how much money I have in it. Like, realistically, I should have way fewer companies in here than I actually do. So I was looking at what I could trim, and that was one of them. So yeah. Next up, Hallenstein's Glassons. We've just been trading sideways on this. It's paying one of the best dividend yields on the New Zealand exchange at the moment. So I don't think it's going to move until we get an earnings report out of them. There's a lot of uncertainty around it because we've had the recent virus outbreak, which their name will get you censored on YouTube, which we all know what it is. We've had an outbreak of that in Australia at the moment, and they do have some Australian stores. So I don't think we're going to see any significant move in the stock price until we get some certainty around how they've been able to perform under lockdown conditions over there. New Zealand has been fine, although Wellington has been in a lockdown recently, so that may be affecting some of their stores. It's a bit of a question mark there, but I've been adding quite heavily because it was a small position, and the US exchange rate hasn't been particularly favourable for buying US companies at the moment. So 6% dividend yield, yep, I'll take that. I'm quite happy to buy a bit more of it, to be honest, at these prices. Next up we have Heartland Group Holdings, which is an absolute beast. All of the banking stocks have been doing really well, but ANZ's probably the only one I'd be willing to touch, to be honest, and this was bought as a dividend play, so this is a never sell for me. I'm just going to hold on to this company indefinitely for the dividend yield, and I'm quite happy to even buy more. We're not far off fair value at the moment, in my opinion. So so long as it's not overpriced, I will probably keep buying just for the dividend yield. And they are still being restricted on how much of a dividend they're allowed to pay. So that will be growing in the future. So quite excited to see where this one goes in the future. Next up, Metro Performance Glass. This is another one I've been adding really heavily to. Now, they have actually declared that they are going to start paying a dividend again towards the end of 2022. It's a small cap. The trading volume on this is very low. So it's an interesting one because at any point a decent, like a large seller could tank the price, or a large buyer could absolutely pump it. But once again, it's a value play for me, so I'm just waiting to see how that shakes out in the future. Shout out to the Stocks with Sam Discord, because that's where I got the suggestion for that one from. Another member was already invested, and recommended this company, and after looking into it, I agreed with his analysis, and it's done very well. We'd be up far more percentage-wise if I hadn't have averaged up quite significantly. The last one up is Oceania Healthcare, which is my rest home play that, so I had sold Arvida and Somerset initially after they had pumped massively because I liked the valuation of this one better. If you want a full analysis of OCA, go have a look at Joshua Wang's video on it because he's gone quite in depth on them. Once again, it's something that I've looked at his analysis. I'm actually slightly more bullish than him, but I broadly agree with it. And it's one that I could stand to make this a $1,500 position, to be honest. It always sucks averaging up once again, but no, I'm really, really bullish on OCA. Its dividend yield is absolute garbage, to be frank, but it's a growth company. To be honest, I would be happier if they just kept that money and reinvested it into the company rather than paying the wee dividend that they do. But it's nice. It gives me an opportunity to take that money and just buy more shares in it, which is what I've been doing with it. And that's about it, guys. Like, comment, subscribe, help me grow this channel a wee bit. Cheers.